Okay, let's look at some of the work in Chapter 1 that may help you with understanding the concepts and how to solve the problems. This is Foundational 15. Again, it's not required for you to do. Only thing that's required in McGraw-Hill Connect are the quiz and the test. Nonetheless, if you want to practice, you can do other parts of McGraw-Hill Connect. So we're going to do this part together. And first of all, let's take note of the information here because this is key. You really have to take note of what it says here. Martinez Company's relevant range of production is 7,500 units to 12,500 units. When it produces and sells 10,000 units, that's within the range, its average cost per unit are as follows. So we see you got a great deal of detail here. Direct material and labor, variable manufacturing overhead, fixed manufacturing overhead, and then you have period cost, these various administrative and selling expenses, both fixed and variable. So this, we got to work with this detail, but keep in mind when it sells and produces and sells 10,000 units, this is the average cost per unit. Okay? And note, pay attention to that fixed manufacturing overhead, as you'll see a little later. So, let's go to our first question. For financial accounting purposes, what is the total amount of product cost incurred to make 10,000 units? Product cost. Keep in mind, it said product cost. What are the product costs? Direct material, direct labor, and the manufacturing overhead, both variable and fixed. So we're coming with $162,000 when you make 10,000 units. Where did that come from? How do they calculate $162,000? Well, first of all, we have the direct material per unit, direct labor, that came from the information up there. And you might want to, you might want to write this down actually, because you're going to be referring to it often. So, take a moment or two and write this down. Direct material 660, direct labor 410, variable manufacturing overhead $1.50. This is per unit. Fixed manufacturing overhead, that would be $4 per unit. Fixed selling, $3.60. Fixed administrative, $2. And we have commission from sales, $1, and variable administrative is 50 cents per unit. And again, we're talking about a range of 7,500 to 12,500 units. That's the relevant range. And these are the unit costs at 10,000 units produced and sold. Okay? So let's keep those figures nearby so that we won't have to keep scrolling up to refer to it. Okay. So we said 162,000. Here's how they came up with that. Notice that we got the variable portion, right? We're talking about product cost, which does not include administrative and selling. So That's the direct material, direct labor per unit, variable manufacturing overhead. Altogether, that's $12.50 per unit. Times 10,000 units, that gives you $122,000. Now, at 10,000 units, the fixed cost is $4 per unit. 4 times 10,000 is 40, so add them together. Now, you might be tempted, and you wouldn't have been wrong. You say, well, just add the $4 to the $12.20. And you would have got the same answer. But the reason why it is separate, it'll be evident later. Okay? It'll be evident later on. So, you add the numbers together. So the manufacturing cost, product cost rather, which is manufacturing cost, is $162,000. And this little note here, the average fixed manufacturing overhead cost per unit is $4. Is valid only for only one level of activities, 10,000 units produced. That's very important to keep in mind, as you'll see later on. The $4 applies when 10,000 units are produced. Okay? So let's go to our next question. Number 2. For financial accounting purposes, what is the total amount of period cost to sell 10,000 units? Now don't forget, your period costs are the selling and administrative costs and the commission. Okay? So what do you think that is? Well, if you take 360 plus 2, that's 560, plus 1 is 660, and 710, $7.10. Now, notice this. We have the sales commission, variable administrative and selling cost at $1.50. 10,000 units, that's $15,000. The 560 is the fixed selling and administrative cost. Notice how they separate variable from fixed. And so the fixed is 560. Add those two together, and you get $71,000. Okay? Notice what they say here. The average fixed selling and administrative expense per unit of $5.50, that's again the 360 and the $2, is valid for only one level of activity, 10,000 units sold. Again, that's another caveat here, because we're going to have problems later on that will you be selling more or less than 10,000 units. So this 560 only applies at 10,000 units produced and sold. Okay, let's move on to the third problem. If 8,000 units are produced and sold, what is the variable cost per unit produced and sold? Be careful. What did we say during the lecture I gave and the audio I added to the PowerPoint slide about variable cost per unit? Does it ever change? Per unit? In total, yes, but does it change per unit? No. 1370. Where we get that from? Look at that. These are all variable costs here. Direct labor, direct material, variable overhead, variable administrative, and of course sales commission. Sales commission is a variable cost. The more you sell, the more commission. The less you sell, less commission. But the commission per unit is $1. And don't forget, variable cost per unit does not change with the level of production. Total variable cost does, but not variable cost per unit. It remains the same, as I explained when I gave the lecture on Chapter 1 PowerPoint slide. So it's 1370, basically. It does not change. If 12,500 units are produced and sold, what's the variable cost per unit? Same thing. There's still 1370. Again, folks, variable cost per unit does not change with the level of production. Only total variable cost in total goes up and down, but the variable cost per unit stays the same. Again, I gave the example. If it takes $12 worth of material to make a table, $12 worth of direct material, it's going to be $12 for each unit, whether you make 10,000 units or 2 units. The variable cost per unit is going to be the same. Now, the total variable cost will go up and down. Obviously, 12,000 tables is going to have a higher variable cost than if you just did 15 tables. Okay? Alrighty. Let's go to number 5. If 8,000 units are produced and sold, what is the total amount of variable cost related to the units? Now here's talking about total cost, not unit cost. So how do we get that? Here we go. We know what the per unit cost is, 1370. So if you produce 8,000 of them, you multiply. If you produce 12,000 of them, you multiply by the unit cost. Okay? See, the previous examples asked for variable cost per unit, but the total variable cost you have to multiply by the number of units. Okay, let's go to number 6. If 12,500 units are produced and sold, what is the total amount of variable cost related to the units produced and sold? What do you think it is? Just look at that. What do you think it is? And how do we get that? Same problem as before. Same as number 5. Number 5 was what? Was it 8,000 units? Let me see. However many units it was, you multiply by that. It was 8,000 units, yes. So this is 12,500 units. We know what the unit cost, total unit cost is, and you multiply by the number of units produced. Okay. Number 7. Now here's where we have to be careful, folks. We have to be careful. So let's take our time with this. If 8,000 units are produced, what is the average fixed manufacturing cost per unit? Now we want the average fixed manufacturing cost. Okay? Not the fixed administrative, but the fixed manufacturing cost. Let's take a look here. It says $5. Now, where does $5 come from? We have $4. Remember, if you remember the amount of fixed overhead at 10,000 units. At 10,000 units, it's $4. But we're not talking 10,000 units. And don't forget, remember we said about fixed cost? As the number of units go down, the fixed cost per unit goes up. Don't forget, fixed cost total stays the same, but the fixed cost per unit goes in the opposite direction with the level of production. So if production goes up, you produce more units, the fixed cost per unit goes down. You produce fewer units, then the cost of fixed cost per unit goes up. So at 10,000 units, Yes, the fixed manufacturing overhead cost per unit is $4, but you're producing less than 10,000. You're producing 8,000, and therefore the fixed cost per unit is higher. And here's one way here's the way they did it. There's another way you can probably do it. This is as straightforward as I guess the other. $40,000 and then divided by 8,000 units. Okay, you see that? You could say, well, 8,000 units is 80% of 10,000, 80% of, or rather, if you take, let's see if my math is correct here. Yeah, if you take $4 and divide it by 0.8, you'll get $5. That may be a little more. I guess it's not as simple and straightforward as this one. So you can go with this method, but if you take the $4 unit and divide it by 0.8 or 80%, you get $5. That's probably a little more involved and necessary. That's why I did it in my head, but the way here is probably the way you should do it. Okay, number 8. If 12,500 units are produced, what is the average manufacturing cost? Again, don't forget that $4 pertains to 10,000 units. So the way they do it is $3.20. Okay, you see that? You take the $4 and 10,000 units, is 40,000, and then you divide it by the number of units, 12,500. And the way if you take let me see. Yeah, if you do it my way, it's a little more complicated. This is a good way, but if you were to if you were to take 10 divided by 1250, let's give you 0.8, and 0.8 times $4 is $3.20. And again, now, I hope not, I don't want to confuse you. But some of you may have figured that out another way to do this, but if you do it this way, it's fine, and it's probably safer. You don't have to do, again, you don't have to do it my way. This way is fine. This way is fine. Let's say there's more than one way to figure this out. So don't forget the production went up, so the fixed cost per unit went down from 4 to 320. Okay, trying to get rid of this. Okay? All right, let's go to problem number 9. Oops, since it was the answer. Well, anyway, if 8,000 units are produced, what is the total, not unit, but total amount of fixed manufacturing costs incurred to support this level of production? What 8,000 units, remember, it was $5 per unit 2 or 3 problems ago. So 5 times 8,000 is 40,000. Okay? I don't know why they do it this way. Even though it's within a relevant range. Total fixed. Okay. All right. Well, the way they did it here, they simply said, okay, the fixed cost within that range. But then, see, I disagree with this. At 8,000 units, you have $5 per unit, right? Let's go back up here. Let me show you where it says $5. Okay. The average fixed manufacturing cost per unit is $5 at 8,000. So 5 times 8 is 40,000. I don't know why they did it this way. I disagree with it, but there you go. Okay. Let's go with number 10. Oops. If 12,500 units are produced, what is the total amount of fixed cost? And it stays at, they say it stays at 40,000. It stays at 40,000. That's what they're saying to us here. The fixed manufacturing overhead cost. The fixed manufacturing cost, which is $4. They're saying, okay, what they're saying, folks, is that as long as it's within that range, the fixed manufacturing cost is going to be $40,000. That seems confusing because they said that we had those two notes that it's at that particular production level of 10,000 that is at 40,000. At 10,000 units is $4 per unit. And somehow, to me, again, that's confusing. But certainly, when I give you the exam, I'm not gonna put you through this particular exercise, this particular point, because again, you know, okay, I see what they're saying. And I don't like the way they worded it. It can make it confusing. It's going to be 40,000 no matter what. 40,000 no matter what, because it's within that range. And so per unit is going to drop, but the total is going to be the same, 40,000. That's what they're saying. And so I overlooked the word here, total. So within that range, it's going to be $40,000. The unit, the fixed cost per unit is going to drop or rise depending on the level of production. But the total manufacturing, fixed manufacturing will be 40,000, period, because it's within that range. I wish they had worded it differently, but that's how they get that. I hope you see that. So they're saying that, yeah, it's going to be $40,000 fixed manufacturing cost no matter what, as long as it's between 8,000 and 12,500 units. But the unit, the fixed cost per unit will rise or fall. At 8,000 it's going to be $5. At 12,500 it's going to be $3.20. But it's still going to be a total of 40,000. Crazy, but that's, I would have worded it differently, but you know, there you go. Now, if 8,000 units are produced, what is the total amount of manufacturing overhead costs incurred to support this level of production? What is this total amount expressed on a per unit basis? Well, let's go here. We're still at 40,000. That's the total fixed overhead, fixed manufacturing cost. All right, fixed manufacturing overhead cost. It's still at 40,000, but it's asking for the total amount of manufacturing overhead, not just total fixed, but total manufacturing, which includes variable also. The variable is $1.50 per unit. So here you have $1.50 per unit of variable overhead times 8,000 units. That gives you $12,000 plus the 40,000 that's going to be there no matter what. It gives you 52,000. And then you divide that by 8,000 units, and you're going to get $6.50. Okay? So the fixed portion is going to be 40,000 no matter what, so long as it's within that range. That is the total. Asking here is asking for total amount of manufacturing overhead, not just the total fixed overhead, but total manufacturing overhead. But that includes both fixed and variable. Okay. Okay, let's go to number 12. If 12,500 units are produced, same question but a different amount. Now it's 12,500. We want the total manufacturing overhead, both fixed and variable. What is the total amount on a per unit basis? Same thing. You got the 40,000. Got the 40,000 fixed. Period. And now you have the 12,500 multiplied by $1.50. Add them together. Then you divide by that 12,500, and you're going to get $4.70. If you divide 58,750 by 12,500, you're going to get $4.70 per unit. So you have to read it very carefully. Are they asking about total manufacturing overhead, or just a fixed, or just a variable? And that's what I just said there. Okay, number 13. If the selling price is $22.60 per unit, what is the contribution margin? Remember the formula, folks. Sales minus variable cost per unit. So we got, if it's $22.60 per unit, what is the variable cost per unit? All the variable costs: direct material, direct labor, variable manufacturing overhead, variable administrative. Add all those together and you get a contribution margin of $8.90. Where did $8.90 come from? Again, it is $22.60 minus all the variable costs. There the variable costs are. Right? As I said, direct material, direct labor. Oh, and I also forgot sales commission to point two. Sales commission is considered variable. Okay? So it's all your variable cost. None of the fixed cost. And commissions is considered variable cost. It's not fixed. And so the contribution margin. Again, remember this from now on for the rest of the semester. Sales minus variable cost is contribution margin. If 11,000 units are produced, what are the total amounts of direct and indirect manufacturing costs? Direct and indirect. So all the manufacturing costs. None of the period costs are involved. Right? Well, how do we get that? Direct labor, direct material is 1070. Times 11,000 units. You go there. Then you got your that's your direct manufacturing cost, because it's direct labor, direct material. But notice here, you still got that $40,000 fixed cost because it's within that range. And then you got the variable overhead of $1.50. So this is the fixed right here. This is the variable overhead, variable manufacturing overhead, $1.50 for 11,000 units. You multiply that, you get $16.50 plus that, and you get Manufacturing overhead is direct labor, direct material. That's 1070 times 11,000 units. Okay, you got that. But the indirect manufacturing is, of course, the overhead. That's what overhead is indirect. That 40,000 is going to be their total. Okay? Then you add the variable, which is $1.50 unit per unit. You got 11,000 units. Okay? Again, I don't want to confuse you here. This 40,000 stays constant because it's the total. It's not per, how can I put it? They say within that range, your fixed cost is going to be $40,000. Within that relevant range of 8,000 to 12,500. That's going to be your fixed manufacturing overhead. Now the unit cost will go up and down, but the total fixed overhead will be the same. Sorry about that. If you increase production by 1 unit, what's the manufacturing cost incremental? $12.20. Why? Because what goes up? Variable goes up. And so fixed is going to be the same. So here you got all your variable costs right there, $12.20. So for each additional unit produced, you incur another $12.20 worth of cost. Let me say that again. For every additional unit produced, it's going to go up by the total variable cost per unit. The total variable cost per unit, manufacturing, that is, not the variable administrative cost, but variable manufacturing cost. See, it says manufacturing cost here. So we'll not include that 50 cents, which is or the commission even. It only includes the manufacturing variable cost. So we got the direct material, direct labor, and the variable manufacturing overhead, $12.20. So for every additional unit sold or produced, it goes up by that amount, $12.20. Now, so I hope you can go over this again a couple of times. I may help you with your work, and obviously I don't like the way some of this couple problems are worded, but as long as you understand the gist of it and ask me any questions you may have via email, you should be okay. So that's it for this one. I'm going to also, within the next 24 hours, upload for Chapter 2 also. So I hope this proved to be useful. Now I gotta elegantly close this, and there we go.